I think there are two or three main challenges. First of all, the preconceptions about Africa being unstable, whether politically or economically. There's still a need to educate investors about those prejudices and address them one by one and decompose the views that less well-informed investors come armed with. Secondly, at the current phase, after 5 or 6 years of very strong growth and generally very positive developments in Africa, again both politically and economically, the expectation, partly due to commodity prices, interest rate cycles, and various other reasons in terms of having increased debt levels in various countries in the continent over the past few years, is that the next 5 or 10 years may well be much more challenging and less plain sailing than the last 5 or 10 years. I think one third challenge, there could be more, is that Africa is composed of many different countries, which makes analysis more complicated for investors, more time consuming, and some of those markets are not large enough to attract the attention or the resources from many international investors, and that can therefore narrow the investor base that they appeal to. I think related to my comments earlier that Africa is a complex set of jurisdictions for investors from the outside and from the inside to analyze. I think the challenge Africa faces is, on the one hand, it has large needs for financing, for infrastructure and many other causes, developmental or commercial or both. At the same time, in a world where there's huge amounts of liquidity looking for assets, my observation is that despite those two factors being in place, the connection between the two is not always made as efficiently as possible. Of course, that's the role of intermediaries such as banks, investors, issuers, governments, regulators, to try and bring those two together. But given the size of the continent, that presents many challenges. Therefore, conferences such as GFC's conference in Cape Town, amongst others, have a role in bringing many people together for well-attended conferences from all of those different constituents and from different countries. Therefore, I think that's the key, is playing a role in helping people make connections, getting people in one place, and getting the issues out in the open that aren't always discussed in forums of well-qualified people. During the panel, which consisted of 2 or 3 African-focused finance institutions, or one DFI with the representative focused on Africa, as well as 2 African or Pan-African corporates, I think the issues we analyzed were where to invest within Africa, how to decide between larger and smaller jurisdictions, more volatile, potentially higher margin, or more stable, potentially lower margin or lower return jurisdictions, and also what mix of bond and loan financing, or how to combine the two products. I think the message on the former was each jurisdiction is very specific, and different types of investors have strengths, either looking at the larger, more stable jurisdictions on the one hand, complemented by other institutions which are looking more at the developmental or smaller end resource-wise.